Welcome to Tim's Strategy of the Week series. Today we're going to look at a great strategy with a weird name, but I think you'll like it. Hold on to your hat. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of the Strategy of the Week. I hope you guys have heard that I've got an app now. It's called the Cash Alerts app. Stay around to the end of the video and I'll tell you a little bit about it. Today we're looking at the Quasimodo trading strategy. Why Quasimodo? Because it's a weird twisted head and shoulders pattern. That's why. Hey, don't blame me. I didn't name it. I'll put a link to the TSG blog in the description below. So, what is the Quasimodo? Well, I'm glad you asked. The Quasimodo is a reversal trading pattern that appears at the end of an uptrend. The Quasimodo pattern has 3 peaks and 2 valleys. The first is the middle peak is the highest, while the 2 outside peaks are of similar height. And secondly, the second valley is lower than the first one. Some people might call this the over-under chart pattern, but I think I like the name Quasimodo myself. A Quasimodo pattern appearing at the end of a bullish run would be a bullish to bearish trend reversal, or a bearish Quasimodo, and a reverse Quasimodo pattern appearing at the end of a bearish run would be a bearish to bullish trend reversal, or a bullish Quasimodo. Now you might be inclined to believe that the Quasimodo pattern looks similar to the head and shoulders trading pattern. You would probably be right, but they are distinct price formations. The 2 major differences between the Quasimodo pattern and the head and shoulders pattern is the valleys have different price structures in the Quasimodo. The depth of the valleys have no symmetry. And secondly, the 2 reversal patterns use 2 totally different entry techniques. The main difference between the Quasimodo pattern and the head and shoulders pattern is the right leg, or the second valley of Quasimodo, is much lower than the left leg, or the first valley. With the head and shoulders pattern, both valleys are more or less of the same scale. That's where the Quasimodo name comes from, because the second valley of the head and shoulders is deformed. The second major difference between the 2 reversal patterns is the point of entry. Usually the point of entry for the head and shoulders is the break of the neckline, but with the Quasimodo pattern we put an entry order near the right shoulder. So the Quasimodo pattern is simply an advanced version of the head and shoulders pattern. A key question that is asked by many traders is how we determine when to trade the Quasimodo chart setup. The best time to trade the Quasimodo pattern is after a significant rally or sell-off, no matter the time frame you're using. All chart patterns are fractal in nature. A fractal is a pattern that remains the same no matter how much you zoom into it. It just keeps repeating itself. That means the chart patterns typically appear in various forms in different time frames, from the daily chart all the way down to the 1-minute chart. This is great news for traders who trade across multiple time frames. The existence of the prevailing trend gives us the opportunity to either catch an entirely new trend, or at least we get the chance to profit from a temporary retracement. Additionally, the Quasimodo chart pattern allows for better entry points, which is in contrast with trend trading where the entry signals are delayed. But as you know, each trading style has its pros and cons. The Quasimodo pattern works based on the imbalance between the supply and demand forces. Or, in other words, the Quasimodo chart pattern tracks the shift in the price structure. Market structure is the continuous series of higher highs and higher lows, producing higher peaks and troughs. When we have a break of price structure, meaning a break of the ongoing higher highs and higher lows, the price starts first to print a lower low. The Quasimodo trading pattern provides us with a proper framework to interpret the constant ebbs and flows of an asset, whether it be currency, cryptocurrency, stocks, commodities, or what have you. In short, the bearish Quasimodo pattern is concerned with how the market comes from a buying momentum and heads towards a selling momentum. Quasimodo chart pattern starts to become visible only once the price fails to make another higher low. For some new traders, this type of information might be enlightening because now you have a proper framework to analyze the price structure. You have to keep in mind that this is one approach to view the markets and is by no means the only one. Let's take a look at the bearish Quasimodo pattern. The Quasimodo trading rules for sell signals can be summarized as follows. Number 1, a prevailing uptrend needs to be visible in the form of a series of higher highs and higher lows. Number 2, the break in the market structure, the price starts to make lower lows. Number 3, you'll place a sell order near the right shoulder. I would probably use a limit order in the right shoulder zone. Number 4, place the protective stop loss above the last higher high or the center peak. And number 5, take profit near the first valley of the Quasimodo chart pattern. As a general rule, the Quasimodo pattern carries more weight if the second valley is much lower than the first valley. In other words, the bigger the distance between the two valleys, the more crooked the Quasimodo pattern becomes. Now let's have a look at the bullish Quasimodo reversal pattern, and these are those rules. A prevailing downtrend needs to be visible in the form of a series of lower lows and lower highs. Number 2, a break in the market structure. The price starts to make a higher high. Number 3, you'll place a buy order near the right shoulder. As I mentioned earlier, I would probably use a limit order in the right shoulder zone. Number 4, place the protective stop loss below the last lower low or the center valley. And number 5, take profit near the first peak of the Quasimodo chart pattern. Now let me share with you a simple but effective trading trick here. If you want to test how crooked the Quasimodo chart pattern is, simply draw some lines with the price structure. When you do this, the Quasimodo price structure will pop up on your price chart. When you highlight the price structure, as we have in the USD yen trade example here, we can clearly see the crookedness of the Quasimodo. In the US dollar yen example, we can see the price structure is not that crooked. It looks more like a head and shoulders pattern actually. In this particular trade, the market didn't give us the chance to enter a buy order in the left shoulder zone. And that's the thing with the Quasimodo pattern strategy. You may miss a few opportunities, but with a little bit of study, you can find a workaround to be able to get into this trade in another way, like buying on a break above the first peak, for example. You need to experiment, practice. None of this is engraved in stone. Always make these strategies your very own. And that's it for this week's strategy. I probably already told you guys this, but I've got an app. It's my first one, and it's called the Cash Alerts app. The app allows you to see my trade picks from the YouTube channel, plus additional trade picks that I'm personally looking at. It will also let you chat with me. Most days I get on the app several times, and I'll be happy to answer your questions or talk about whatever you like. This image right here shows you a look at one of the live trade entries with the list of the current live trades on the left. If you're interested in the Cash Alerts app, just click the link in the description box below. Be sure to come back next Wednesday as we take a look at a few more trade examples in our trading education series. And don't miss my trading picks of the week on Mondays and my strategy of the week on Friday, right here at Trading Strategy Guide's YouTube channel at 3 p.m. New York time, barring unforeseen circumstance. And be sure to subscribe and hit the bell, whatever that actually means. Have a great weekend, and I'll see you with a surprise and a couple of trade picks on Monday.